Every single month, without fail, I invest a portion of my salary into the stock market. It doesn't matter if the headlines are screaming about tariffs or recessions or bubbles. When I get paid, I invest. That tends to be a set amount, which is currently £1,500 added to my pension and £1,000 added to my stocks and shares ISA. Before I dive into what I did with my money, I'm going to have a quick look at my portfolio performance over the last month. My stocks and shares ISA is up by 2.4%, which in most circumstances would feel pretty good. But this is not most circumstances, because global stocks rose by over 3.8%. The S&P 500 was up by almost 3.7%, but hey, at least I beat the FTSE 100. Now, you might notice I'm comparing to index funds rather than actual indexes, and I do that for two main reasons. One, so I don't have to allow for exchange rate fluctuations. Because my portfolio is in pound sterling, it makes sense to compare the indexes in pound sterling. And indexes like the FTSE All World or the S&P 500 are based in dollars, and the dollar has been on a huge decline this year. It's why the S&P 500 index is up over 13% year to date. But as a UK-based investor, if I'd invested in an S&P 500 index fund, I would see a profit of less than 5%. And that's because the US dollar has weakened so much against the pound. Either way, despite my portfolio being up by 2.4%, I still wouldn't class it as a good month because it's underperformed a global stock market index fund, and by a fair margin. A global index fund is what I aim to outperform over time, because it's where I would be parking my money if I didn't bother trying to pick individual stocks to invest in. And in terms of what drove my portfolio's performance, a big winner this month was ASML, the Dutch manufacturer of semiconductor equipment. Shares are up almost 30% in the past month, which was a pleasant surprise because this investment has spent most of the last 2 years in my portfolio going nowhere. I think the big boost came from a couple of recent investments in Intel. Firstly from the US government, and then from Nvidia. The takeaway here was that Intel would likely be expanding its chip manufacturing footprint and capabilities. And you'd fancy its chances when it's backed by a government that enjoys winning, as well as the king of the AI boom. But if Intel wants to expand its chip making, it will need more high-tech production facilities. And companies simply cannot produce the world's smallest and most efficient computer chips without ASML's machines. So not only does the market now think ASML will get a boost from potential future sales to a revitalized Intel, but it's a signal that there could be increasing demand for chips and modernized facilities more broadly. And that certainly helped my portfolio this month. Other notable winners were CrowdStrike, with shares up almost 15%, and Alphabet, with shares rising 13%. Unfortunately, 4 of my 5 largest holdings were in the red this month. So it's probably no surprise that I couldn't match the stellar result of the indexes. Axon dropped by 5%, the trade desk fell almost 9%, Mercado Libre was down by 2%, and Adyen fell nearly 5%. To be honest, there's not a single business in that list that I'm worried about. I don't care too much about the month-to-month movements of these stocks, so long as the businesses themselves are not giving me a reason to start panicking. And I know it's been a particularly rough year for the trade desk, and there's a lot of negativity around the stock right now. There was one big notable drop in the past month for the trade desk on the news of Netflix signing a deal with Amazon's competing product. This means companies could now place ads on Netflix through Amazon's advertising platform. But that shouldn't be a surprise. Obviously, if you're Netflix, you would want to sign as many advertising platforms as possible in order to fill up and get as much money as you can for the advertising slots that you have. It doesn't matter if the trade desk has the best or the worst advertising platform in the world. Netflix would still sign this agreement with Amazon. It's now just up to the trade desk to do what it does best. Beat the competition by having better targeting for advertisers and delivering a better return on ad spend. The company managed to succeed in a world where Google dominated online advertising, and so I expect it to continue doing so, even if a new tech behemoth like Amazon is getting involved. But unfortunately, us investors won't have much tangible evidence of this success or potential failure until the trade desk next reports in November. So until then, I expect the bad vibes around the stock to continue. Anyway, let's get on to the investments that I bought this month. Starting with my Vanguard self-invested personal pension, or SIP. As always, I added £1,500 to the Vanguard FTSE Global All Cap Index Fund. This fund holds thousands of small, medium and large companies across the world and is about as diversified as you can get. So it's perfect for the set and forget approach that I like to take with my pension. I don't want to stress about it, I just want it to grow quietly in the background over decades. Now onto the more interesting stuff. My Trading 212 Stocks and Shares ISA. Now the reason I use Trading 212 for my Stocks and Shares ISA, and have done ever since I started investing, is because of their very low fees. This makes it super cost effective for long-term investors like me, and it means that I get to keep more of my returns. And Trading 212 are sponsoring this portion of the video too. In fact, you can use our promo code SNSBonus to get free fractional shares worth up to £100 when you sign up and deposit £1. Now, back to my Stocks and Shares ISA. I added £1,000 here, like I do every single month, and I decided to spread that money across 4 different investments. I've decided that in these videos, I'll focus on one investment in a bit more detail each month. I'll still talk about all the investments, but I think it makes more sense to do that rather than just repeating a surface level overview of each stock every month. And I'm quite excited about the investment I've chosen to talk a bit more about. The company is Games Workshop, which I invested £200 into. I've been slowly building out this position over time and plan to continue doing so for the remainder of this year. But I think it's time to talk a little bit more about why I like this business so much. And as a quick reminder, Games Workshop is a UK-based company best known as the creator of the Warhammer universe, a deep world of fantasy and science fiction that underpins tabletop miniature war games that are enjoyed by millions of fans around the world. If you're not familiar, Warhammer is a blend of strategic miniature gaming, intricate model painting, and lore-driven storytelling. But today, Games Workshop isn't just selling its miniature figurines or games, it's cultivating the entire Warhammer universe. And that universe is intellectual property. And since that's going to be the main focus of this segment, I should probably start by defining what intellectual property is. Intellectual property, often shortened to IP, refers to something that you create using your mind, such as a story, an invention, or an entire universe full of characters. Perhaps the most famous IP-driven business is Disney, which is home to the worlds of Marvel and Star Wars and a whole host of beloved characters. Intellectual property prevents other businesses from simply copying these creations. They are treated as a company asset and are legally protected from outside use or implementation without consent. So this deep Warhammer universe that Games Workshop created is legally protected, creates incredible brand loyalty, and it can be monetized in all sorts of ways. Take licensing, for example. For years, Games Workshop focused mainly on its core hobbyist market of selling miniatures and rulebooks for its tabletop wargames. But in recent years, they've signed over 100 licensing deals to let other companies create Warhammer-themed video games, comics, collectibles, and more. I think one standout recent example was the video game Warhammer 40k Space Marine 2, which launched in late 2024 and has sold over 7 million copies in less than a year. It drove Games Workshop's licensing revenue up almost 70% year on year, from £31 million to £52.5 million. And sure, licensing was still only 8.5% of revenue, but because it's super high margin revenue, it made up nearly 20% of operating profit. And the next catalyst could be even bigger, the Amazon deal. Games Workshop has signed with Amazon to produce TV shows and films set in the Warhammer universe, with Warhammer superfan Henry Cavill on board as both a producer and actor. And there's 2 main upsides here. The first is pretty obvious, but the second, I think, is more powerful. So first, this could provide a huge boost to Games Workshop's highly lucrative licensing revenue. We don't know how much yet, but if the show is a hit, and if it gets renewed for multiple seasons, it could be a huge boost for Games Workshop's bottom line. But the second upside comes from the second order impact of the series, because if even a fraction of Amazon Prime's global audience gets hooked and decides to dive deeper into the Warhammer world, it could provide a huge amount of growth for Games Workshop's core business of miniatures, games, and merchandise. There's a lot to like here, but for me, it's the potential upside that this optionality delivers. The core business is already profitable and growing, and I think it would continue to do so regardless. But licensing opens up new high-margin revenue streams that could both dramatically boost profits for minimal effort and could bring so many new people into the Warhammer community. It's almost like other companies are paying Games Workshop for the pleasure of advertising its Warhammer universe. But of course, there are risks. The Amazon show could flop, or hardcore fans could feel alienated if Games Workshop tries to expand too fast. But with decades of thoughtful management and a track record of treating this IP carefully, I'm pretty confident. It's not often that an economic moat in a business involves sci-fi fantasy sagas, but there you go. This Warhammer IP has translated into incredibly loyal customers, strong pricing power, and now high margin licensing opportunities. That's why I'm so happy to keep building out this position, and why, even after a decade of stellar growth, I think Games Workshop remains one of the most exciting UK stocks around. Now on to the other investments I made. I added £200 to my existing Amazon investment because apparently I always have to invest in a mega cap tech stock that I think is undervalued. For most of this year, that stock was Alphabet, but now I think it's Amazon that isn't feeling the love from the market. And I'll admit that its cloud business AWS has disappointed slightly when you're seeing similar businesses like Microsoft and Google and even Oracle now absolutely smashing it. And the company has suffered probably more than most from tariff pressures, but the business remains fantastic in my eyes, and it's trading at just over 30 times forward earnings at its current share price of around $220. For a dominant company, the analysts expect to grow earnings around 20% a year for at least the next few years. This felt like a great opportunity for me to top up my existing position. I also decided to add £500 to my global pie. This consists of 2 global index funds, and it basically does the same job in my stocks and shares ISA as my global all-cap index fund does in my pension. It's just a much steadier, hands-off investment that provides a bit of balance with my fast-growing and certainly more volatile individual stocks. I think it probably accounts for about a quarter of my stocks and shares ISA at the minute, which admittedly isn't much, but still helps to add a bit more stability. And finally, I added £100 to my existing investment in New Holdings, a company I spoke in detail about, I think in last month's video. It's a fairly new position that's already up 20% or so, but I think this South American digital bank still has so much room to grow, and I believe that its current valuation undercooks this opportunity by quite some way. So to recap my October investments, £500 went into my global pie, £200 went into Games Workshop, £200 went into Amazon, £100 went into New Holdings, and then over in my Vanguard Pension, it was the usual monthly contribution into the FTSE Global All Cap Index Fund. As always, let me know if you have any interesting looking stocks or funds down in the comments, because I'm always looking for new ideas to research. And be sure to subscribe and give this video a like if you found it useful. Thanks so much for watching, and I'll see you next time.